The real issue is not just the liquidity, it's the market participants. And we've talked about this. There are four types. There's investors. I put myself in this camp. I think Raul would put himself in this camp. It's people who like to buy things below their fair value. If I can buy $1 for 50 cents, good. Maybe it goes back to $1, maybe it even goes back to $1.20. But if I can buy $1 for 50 cents, I like that. That's an investor. Now, as the price starts to move, the traders get involved. And traders don't really care about values. They just want to make money. And some people are really good at it. Most people are not. 90-10, 10% are good, 90% suck.
Bitcoin's having one of those wild moments again, sitting around $70,000 and popping 10% in a single day. And honestly, the move makes sense when you see what's happening behind the scenes. ETF money is flowing back in hard, over $1.2 billion just last week, and BlackRock's IBIT is basically leading the charge with fresh institutional buying. Meanwhile, long-term holders are quietly stacking more coins, even though futures open interest dipped a bit. That usually means traders are taking a breather, not disappearing. And yeah, everyone's watching that $95,000 resistance. If Bitcoin cracks it, $100,000 isn't hopium. It's a straight line powered by the halving and some actual regulatory clarity coming from things like the Genius Act. Then popular American investor and crypto analyst Mark Yusco pulled up in a recent interview and broke the whole market down in a way that just clicks. He basically said, look, price isn't just about liquidity, it's about the kind of people in the market. He splits them into four groups. First are the investors like him and Raul Pal, the value hunters. They buy $1 for 50 cents, ride it to $1, maybe $1.2, and even at $1.5 it still makes sense. But once the price starts running, that's when the traders jump in. The fast money crowd. According to Yusco, only about 10% of them actually know what they're doing. The other 90%? They're basically the liquidity for the winners. From there, the cycle gets deeper. Miners selling above their costs, gamblers chasing parabolic moves with crazy leverage, and eventually the calm, rational investors returning to scoop up the pieces. Yusko's been doing the math for years, gold equivalents, market cap expansions, and he nailed the last cycle's peak at $126,000. Now he's casually throwing out $600,000 to $700,000 by 2029 like it's just the next chapter. Let's watch more clips from him.
And I heard you have said before, you're a believer in the 4-year cycle, or more specifically, the 3-year, 11-month cycle.
311. Yeah, let's talk about 311. Yep.
Which would mean that Bitcoin would bottom sometime this year. We're in a bear market. Is that your belief?
Yeah, we're in crypto winter. Everyone hates me because I keep talking about it. And look.
But you were right. You were right.
Everybody wanted to say that the 4-year cycle was dead. And my favorite was the guy who coined the cucumber market, right? So people are familiar with the banana zone, right? Which is, technical analysts look at these rising parabolic moves and they kind of look like a banana, and then they correct, and then you get another banana. Okay, fine. And there's a guy who said, no more bananas, right? We're not going to get any more parabolic moves. We're now in the cucumber. So it's just going to be this steady ascent, number go up. I'm like, well, why? He's like, well, the institutions are here and they're just going to buy up all the supply. I'm like, okay. On the surface, that math is true, right? The institutions, the ETFs and the institutional buyers did last year buy 4 times more than the amount of Bitcoin that was mined. True fact. But somehow the price went down. How? Because some people who've been holding for a very long time also sold. Well, why would they sell? Well, lots of different reasons. But the bottom line is, it wasn't even that. The price of Bitcoin isn't necessarily set only by spot, right? If I have a Bitcoin and I sell it to you, we agree on a price and we sell and we exchange it, but that's a very small portion of the overall activity of trading, which is now dominated by futures. And look, this was intentional. This is not new. It has been going on for decades. It's the reason that Bitcoin and Ethereum in particular were deemed commodities not securities, everybody's like, oh, yay for us. They're not securities. Like, no, no, stop. That's not what you want. You would have much rather have be a security and regulated by the SEC and not had this crazy futures market. Once you have a commodity, then this bad thing can happen, which is in the old days of commodities, right? I'm a cow farmer, you're a pig farmer. We meet at the market and we want some of the other. So we literally swap a physical cow for a physical pig. Great. Okay. Analog. That was inconvenient, right? So you leave your pigs back at the farm. I leave my cows back at the farm, and we stamp out some coins. Yours have little pigs on them. Mine have little cows on them. And we exchange the coins. But the problem with that is carrying around that sack of coins, the banditos can come steal our coins, and that's less good. So we put our coins in the bank, and now we write a contract that I'll give you 2 pigs for 3 cows or whatever. But we still, on the farm, had to have the physical item. Oil then happens. So someone discovers oil. In the old days, if I wanted to sell you a barrel of oil, I actually had to have a well so I could produce a barrel of oil to sell to you. Well, then this financial engineer came along and said, well, yeah, that's great. But Mark, you could just write a contract for a future barrel of oil, but I don't have enough oil in the well to, don't worry about it. As long as you settle up the contract before it's due, you don't ever have to come up with the oil. Okay, so I can create oil out of thin air. Magic. So everyone starts doing this. And every time you get one of these parabolic banana zone moves, what you'll notice is there's 3, 4, 5 paper somethings, barrels of oil, bricks of gold, ingots of silver, bushels of wheat, whatever it is. Commodity markets can be manipulated. Well, then it gets even more dastardly because, well, what if I wanted to manipulate the price? I could just sell a barrel of oil and put downward pressure on the price. Because then if I wanted to go buy some real stuff, I could buy it at a lower price. And this is the oldest secret in the book on Wall Street, right? Julian Robertson, mentor, friend, when, I learned so much from him. And there's this great story. One of his guys was his analyst, and he said, Julian, I think we should buy some copper. And he's like, yeah, I think it's a good idea. Copper's going to be used, electrification. He says, all right, great. I'm going to go buy some. He says, no, stop. Go short 50 million of copper. Call everyone you know and tell them we hate copper. He's like, what are you talking about? He says, we don't want to buy it high. We want to buy it low. So we want to push the price down before we buy it. So that is possible. And look, the banks, remember when GLD came out, gold price was stuck around $400 and it couldn't get above 400. And every time it would hit 400, it would just get slapped back down. And it was stuck for years. Well, why was that? Well, every time it would get close to 400, JP Morgan was selling the crap out of futures. And so this demand that was created by GLD wasn't entering the spot market because the futures market was slapping the price down. Then, maybe 4 years ago, they got fined $960 million, almost $1 billion, for spoofing the gold market, which is illegal. And when they asked him about it, he's like, yeah, but we made 20 billion. So yeah, whatever, it's 5%, cost of doing business. So that's kind of what's been happening in the Bitcoin market and the Ethereum market to a lesser extent. But the Bitcoin market since the introduction of the ETFs. So I love every month, every quarter when the 13Fs come out and people say, oh, look, Millennium bought $2 billion of Bitcoin, the IBIT. No, they didn't. They're long IBIT, but they're short futures because they are market neutral. They don't take directional positions. So this spoofing is going on. And again, gold from 2021 to no, 2022 to 2025, gold was stuck around 2000 bucks, give or take a couple $100 either side, right? Well, then suddenly it went to, 3,000 and then suddenly to 5,000. Well, how? Why? Well, what happens is the spoofing is happening. Well, as soon as you break through, right? As soon as there's excess demand of some sort, now you get a short squeeze. So all these people who are short have to buy. And we heard about this, a couple weeks ago in the silver market. Supposedly JP Morgan was short 2 times global silver. That's a lot. And so they had to go buy. Well, if you have to cover a short sale, you don't get to pick your price because the person who's going to sell you the next one is going to charge a higher price. And so the price goes totally parabolic. And so that's what happened with gold. That's what happened with silver. At some point, it'll happen with Bitcoin again.
Bitcoin's so-called 4-year cycle is closer to 3 years and 11 months, and that tiny detail explains why so many people misread crypto winter. Historically, this phase marks a bottom, but every cycle brings skeptics claiming the pattern is dead. This time, they push the cucumber market idea, suggesting things are too flat for those parabolic banana zones, the chart arcs before major rallies. The reality is simpler. Institutions reshaped the rhythm. ETFs and big buyers absorbed nearly 4 times the Bitcoin mined last year, yet prices dipped because long-term holders took profits. Spot trading barely matters now. Futures dominate, just like other commodity futures trading commission, supervised commodities. According to Mark Yusco, to understand this, zoom out. Commodities always evolve from physical trade to paper claims. Oil futures, gold contracts, wheat derivatives. Paper supply often grows 3 to 5 times larger than the real thing. Julian Robertson. Shorted copper, talked down the market, then accumulated for the boom. Gold stayed suppressed for years as JP Morgan Chase leaned on futures pressure. Bitcoin isn't broken, it's following the same commodity script. Let's go back to the interview for more details.
The real issue is not just the liquidity, it's the market participants. And we've talked about this. There are 4 types. There's investors. I put myself in this camp. I think Raul would put himself in this camp. It's people who like to buy things below their fair value. If I can buy $1 for 50 cents, good. Maybe it goes back to $1. Maybe it even goes back to $1.20. But if I can buy $1 for 50 cents, I like that. That's an investor. Now, as the price starts to move, the traders get involved. And traders don't really care about values. They just want to make money. And some people are really good at it. Most people are not. 90-10, 10% are good, 90% suck, but I'm horrible at it, so I don't even do it. Then the problem is once you get to fair value and you start to get above fair value, now the hedgers come in. Well, what's a hedger? A hedger is someone who produces an asset that needs to sell it to pay the bills. Oil producer, gold producer, silver producer, Bitcoin miner. Well, if the price is below their cost of mining it, they're not going to sell it. If the price is above the cost of mining it, I think the average all-in price, electricity is like 55 grand, all in is like 71 grand, something like that. So as long as the price is above that, they're going to sell to pay the bills. Well, then the problem is the gamblers come in. And the gamblers are the ones that take you to that final parabolic move because they buy stuff on leverage. And that's not in and of itself evil, but it's dangerous because it causes the volatility. And so you can get the parabolic spike, but then you're going to have the crash. And so I think we had the wave of gamblers, August, September, October. Now we're in the cleaning out the system where you get rid of the gamblers. The hedgers are still okay because at 75, we're still above the cost at 71. Once we drop below that, then the traders flip from being long to short. They're still happy. And it's going to take a while before the investors come in and say, hey, I can buy $1 for 50 cents.
Bitcoin price prediction by peak of next cycle. I think you were pretty darn accurate calling this last cycle when I asked you years ago. I think you said either 120, 140 max. I mean, we pretty much got there.
Yeah. I mean, it's pretty good. I mean, look, and so it's just, to me, it's just math. And so Um, to me, the um, there's two ways I approach it. So one is Bitcoin gold equivalents, right? Which is I do believe someday the monetary value of gold, which is about half of the total value, because the other half is jewelry and chalices and art and stuff. But the monetary value, the bricks that are in central banks, et cetera, is about half of the value of gold. So, you know, way back when we were 20 trillion of gold, I said 10 trillion of Bitcoin value. So, you know, that was my that was where I got the directionality for the 100,000 to, 120, 140. The other piece of it is every halving, we add a zero. So we increase the total market cap 10x. Now, does that mean it has to happen every time? No, but it has from 10 to 100, from 100 to 1,000, from 1,000 to 10,000, 10,000 to 100,000. But that's the fair value. But inevitably, we go above fair value. So when it was at 10,000, we got to 20. And at 100,000, I thought, we'd get not all the way to 200, but, 150 maybe. I think that was the number in my presentation last January. And yeah, we got to 126. Okay, so call me a liar. Now, at least I wasn't the guy calling for 2 million. There are plenty of those. But that's a long-winded way of saying next cycle, if we added a zero, fair value would go to 1 million. People, oh my God, Mark, that's so ridiculous. I'm like, well, okay, let's back into it. So gold market cap increased, at one point it hit 37. I think it's now back at, 32, 33. Let's just round it to 30. Let's say it settles in at 30. So that's 15 trillion. So 15 trillion gold equivalents. If we got Bitcoin at 1.7, right? 1.6. So let's just, again, use round numbers. Let's say it's 10 times from here. So 10 times 75 would be 750. It's a little light. I'm okay with that. So I'm pretty comfortable that the next cycle peak, which would be, 29, and it would be, September 29, somewhere between 6 and 700K.
Mark, do you think that given that amount of time, with the Clarity Act, with the Genius Act, will Ethereum outperform Bitcoin, or will Bitcoin outperform?
Okay. This is a longer conversation, but the Genius Act, very good for Ethereum because it basically said if you're not Tether or USDC, you don't count. It's not exactly that, but they're the preferred providers, and and you can see it in all the data, right? All the data is the Ethereum growth continues, and everyone else is playing catch up. It doesn't mean there won't be stable coins on other chains. So the Genius Act, I will argue, isn't really a good thing because now part of that is they can do what they just did. They can go to Tether's office and say, we're seizing those coins from those Iranian wallets. That's not the decentralization we all envisioned, right? And the fact that you're going to, if they outlaw self-custody in, the Clarity Act and say you have to put it at Coinbase or, Kraken or someplace like that, and then we can go in and take it, that's less good. So that's a whole different guy. So I'm an okay supporter of the Genius Act. I don't love it, but I don't hate it. I hate the current market structure Clarity Act. And, the fact that Brian Armstrong was labeled public enemy number one last weekend by Wall Street means that we should all be very afraid of the bill as it's currently passed. I'm probably going to have, the black hat show up when I say this, but everyone thinks the president is our friend, meaning our collective friend in crypto. He's not. He's just not. He is definitely not. He has a whole different agenda, and Besant and all those guys are included in it. And it is Cantor and Tether and there's some clandestine stuff, but it's all about preserving the dollar hegemony and preventing Xi's vision of the world.
Mark Yusko explains that once Bitcoin hits fair value and pushes higher, hedgers step in. Producers like oil drillers, gold miners, or Bitcoin miners who must sell to cover costs. Below mining expenses around $55,000 for electricity or $71,000 all in, they hold back. Above that, they offload steadily. Gamblers then fuel the final parabolic surge via leveraged bets, sparking wild volatility, spikes, and inevitable crashes. He notes a gambler wave hit in August through October, now clearing out as prices hover near $75,000, still viable for hedgers. Drops below cost flip them to shorts, delaying investor entries hunting bargains like $1 for 50 cents. Yusco nailed the last cycle's peak near $120,000, $140,000, proven by the $126,000 high. He uses Bitcoin gold equivalents for math. Gold's monetary half value, central bank BRICS, hit $20 trillion once, implying $10 trillion for Bitcoin, guiding $100,000, $140,000. Cycles add a zero to market cap, from $10 billion to $100 billion, up to $1 trillion, marking fair value, though euphoria overshoots. Next cycle's fair value nears $1 million, with gold settling at $30 trillion total. Bitcoin at 10x current $75,000 lands $750,000. Mark Yusko pegs the 2029 peak around September at $600,000 to $700,000. On Ethereum, Yusko sees the Genius Act boosting it by favoring Tether and USDC as stablecoin leaders, evident in Ethereum's growth data. Yet he critiques it for enabling seizures like Tether's Iranian wallets, undermining decentralization. The Clarity Act fares worse, potentially mandating custody at exchanges like Coinbase for easy confiscation. Brian Armstrong's Wall Street vilification signals dangers. Yusko warns the president isn't crypto's ally, prioritizing dollar hegemony via figures like Besant, Cantor, and Tether amid covert maneuvers. What do you think drives Bitcoin's next parabolic move? Patient investors waiting for fair value, or leveraged gamblers chasing the spike? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.